Hello and welcome to my channel. In this video, I will analyze and try to understand if Tesla is currently overvalued or not. To understand whether we are overpaying for a stock, we need to study three important things about the underlying business. The three things that we will study about Tesla are its current financials, its current valuation, and its financial future. As of January 2021, the total market capitalization of Tesla is $700 billion. That means if you decide to buy whole of Tesla, you will have to pay $700 billion. And by paying that huge amount, you will get a business which generates annual revenue of about $25 billion and a net profit of about $400 million. If you see the chart on the right, majority of the price rise has happened between January 2020 to January 2021. Using the current financial information, we can now assess the current valuation of Tesla. Looking at the three important valuation metrics for Tesla, we can sense that Tesla's current valuation is exorbitantly high, and it could possibly be in an overbought zone. However, stock market is a discounting machine, so we need to also look at the future of the business. Before we look into the future, let's understand each of these metrics individually. The price to book ratio for Tesla is about 45, which means Tesla is worth 45 times its total net assets. The price to sales for Tesla is about 25, which means Tesla is worth 25 times its total current sales. And finally, the price to earnings ratio is 1500. It would be unfair to assess the valuation of Tesla using price to earnings ratio, as the company has not yet fully turned profitable because it is still in capital investment and expansion mode. As I said, stock market is discounting machine and it values businesses based on their future earning potential and not merely on current financials. So let us look where would Tesla be in the next 10 years. To know where Tesla would be in the next 10 years, we make an optimistic future projection based on the data currently available. As of 2020, about 90 million automobiles were sold globally, and historically the automobile industry grew at about 5% annually. And Toyota is the market leader with about 12% of the total market share. As the market leader, Toyota sells about 11 million automobiles annually across the globe. Using this data point, we will create an optimistic case for Tesla and build future projections for the year 2030. So, assuming a 5% compounded annual growth rate for 10 years from 2020 to 2030, the total number of automobiles sold globally in 2030 would be about 150 million each year. And if we assume that by 2030, the Tesla would be the market leader with 12% of the total market share, then Tesla would be selling about 18 million automobiles annually. We then calculate what profit would Tesla be making by selling these many cars and trucks. With an average selling price of about $30,000 and a profit margin of 8%, Tesla would be generating a net profit of about $43 billion annually by 2030. The 8% profit margin is the average net profit margin for automobile industry. Although some people claim that the profit margin for Tesla would be higher, but even if you look at the current EBITDA margins for Tesla, it is about 15%. So even after excluding depreciation, taxes and interest costs for Tesla, the overall profit margin for Tesla is in line with industry standards. Now that we know the financials of Tesla in the year 2030, let us calculate how much should we pay for Tesla in the year 2030. So the average price to earnings ratio for automobile industry is about 16. Applying this ratio to earnings of about $43 billion, Tesla would be worth about $700 billion in 2030. Or if we apply the price to sales ratio of 1.5, Tesla would be worth about $800 billion in 2030. However, the current valuation of Tesla is already about $700 billion. This means that if you buy Tesla today, you might not see a significant rise in the price of Tesla even 10 years later. This happens because stock market is forward-looking machine and it discounts the future earnings of the business in its price today. Something similar happened to Amazon.com from the year 1998 to 2008 during the dot-com bubble. During the dot-com bubble of 1998, Amazon's valuation reached so high that it almost took another 10 years for the stock to reach the same valuation as of 1998. Do you think Tesla would see the same fate? Well, this video was merely an opinion on the stock of Tesla. For any form of investing activity, please do your own research and refer to your personal advisor. I hope this video helped in offering you a fresh perspective. Thanks for watching.